What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Well, guys, I wanted to give you a end of the day update on the stock market. If y'all were checking out my video from this morning, you guys know we didn't start out real good in the stock market and we didn't finish real good, right? Now, before I go into my little 2 cents and give you my opinion, just my personal opinion, I got to give you a disclosure. This is not financial advice. I'm not a financial advisor. I'm just a guy on YouTube sharing his personal opinion on what I see happening in our stock market, in our economy, with interest rates, etc. Please go out and do your own homework so that you can make your own financial decision. And if you're not comfortable in making your own financial decision, go out and get yourself some professional help. Having said that, let's dive into it. Dow closes down nearly 500 points. S&P logs its longest slide since August. None of that is good, guys. None of that is good at all. Stocks fell again on Tuesday after tech shares continued to retreat on concerns about valuations of artificial intelligence related stocks, and as Bitcoin dropped briefly below 90,000 per coin, a sign of reduced risk taking by investors. So investors right now are rotating out of equities and they're rotating out of Bitcoin. So where are they taking their money? In my opinion, they're taking their money to money market accounts, whether it be in their brokerage accounts or whether it be on the bank side of their particular company or one of the big four banks. Nevertheless, they have made a pretty substantial return year to date, in my opinion now. Remember, we had Liberation Day in April. And of course, major investors and some retail investors backed up the dump truck and filled it up with a lot of really cheap goodies. And they held on to those cheap goodies as they continue to increase in value. And in the month of October, they pretty much reached their peak. And what a lot of investors are doing right now, they're taking profits. And again, guys, I'm no professional. I'm just giving you my opinion, but I believe that's what's happening. This whole notion of, oh my goodness, the stock market is going to never come back. Listen, man, that's propaganda. The only reason the stock market exists, in my opinion, is to go higher. So this whole notion of, oh, they're never coming back into artificial intelligence companies. Yeah, they are. They're just taking profits, man. Right? They're just taking profits, running down the price again. And then at some point when it's low enough, they get back in. And in the first quarter of 2026, they run it back up again. Now, that's my opinion. Go out and do your own homework. Come up with your own conclusion. The Dow Jones Industrial Average shed 440 points, or 1%. S&P 500 lost 0.7%, putting it on pace for its fourth straight losing session. When they say session, it means trading days. So for the fourth straight trading days, the S&P lost ground, which would be its longest slide since August. The NASDAQ decreased 1% at their lows of the session. The blue chip Dow was lowered by nearly 700 points, or 1.5%, while the broad-based S&P 500 and the tech-heavy NASDAQ had fallen 1.5% to 2.1% respectively. The day's moves were pressured by AI chip darling NVIDIA, which fell more than 2%, and fellow Magnificent Seven members, Amazon and Microsoft. Amazon last down 4%, while Microsoft slumped 2%. So Magnificent Seven right now, not looking real good with the exception of who? Google, Alphabet, been killing it. Rest of the Mag 7 not doing as well. But in my opinion, guys, hey, a consolidation or correction, that's necessary. So as of right now, when we look at 2025, at least in my opinion, we've had a couple of major consolidation. One was after Liberation Day and potentially right now, right? So, but not uncommon, 5, 3, 4, 5, maybe even a 10% correction. Not too drastically uncommon, right? We could see an 8% or 9% decline when all is said and done. This is coming from Chief Investment Strategist at CFRA, Sam Stovall, said about the S&P 500. So right now, this expert, Sam Stovall, he's the chief investment strategist, says we could see an 8 or 9% decline in the S&P before this thing is all over. Is that drastically uncommon? I don't think so, right? History tells me, though, we typically come back stronger. That's what history tells me. But you guys got to go out and do your own homework and figure that one out. It might end up concluding sooner if we get the kind of earnings that our analyst is expecting from NVIDIA. See, all of this stuff starts and stops with NVIDIA, guys. Why? It's the most valuable company in the world by market cap. It's the center of artificial intelligence right now, NVIDIA. Again, all this is just my personal opinion. That doesn't mean that it's fact. It's just my personal opinion. So that's what this expert is saying. We can end this quickly, or it can continue to linger on. But in his opinion, 8 or 9% could be the bogey for the S&P. Unless NVIDIA comes in with a Superman suit on and save us, right? And if we get employment data that is weak, but not pointing to recession, basically what he's saying there, if we get some more employment data that shows the labor market weakening, but not to the point we're going to go into a recession, that may push the Federal Reserve to do what? On December 10th, lower interest rates, 25 basis points. That's where he's going with that. NVIDIA has plummeted 10% this month, leading up to the chip maker's third quarter results due after Wednesday's close. The company, which is reporting toward the end of a strong earnings season, has been at the center of a debate about the strength of the AI-powered market rally this year, as concerns have grown about pricey tech valuations and the soundness of AI fundamentals due to a boom in big tech debt offerings. Once again, everything comes back to NVIDIA. 900-pound silverback gorilla sitting at the top of the mountain, nobody else close to touching them. Looking at all the rest of the little gorillas down there, these other AI companies, they up at the top. Everything comes down to them. Let's see if they can pull us out of this funk. We will know tomorrow. We'll know tomorrow. Let's keep going. A big AI partnership announced Tuesday failed to lift related stocks like such deals have in the past. AI startup Anthropic said it will spend $30 billion with Microsoft, and in turn, Microsoft and NVIDIA will invest billions in Anthropic. NVIDIA and Microsoft remain deep in the red following the deal. Now, if you go back this year and you think about the AI companies that have did deals together, it always rallied everything. Well, at least those companies. Even with an announcement like this from Anthropic, with this two-way partnership between Anthropic and Microsoft and NVIDIA, it did not get them out of the red. Microsoft and NVIDIA stayed in the red. It just, investors are starting to get really skeptical about these deals between these AI companies. Investors are saying, hey man, y'all are spending billions and billions of dollars trying to get this AI thing going. When are we going to see some profit? When are we going to see a payoff for all of this billions spent? We don't want to see no AI deals. We want to see some profits where y'all are actually making money off of this stuff. And that's the problem that some of these bigger investors are starting to kind of scratch their head around, right? We're going through a natural digestion of gains at this point, and people have to question the backdrop. The strategists continue. This is the expert, Sam Stovall. Something else will have to happen to make the investors say, well, wait a minute. Maybe I was too early on my worries. Right now, they're worried. But if something happens, maybe they say, you know something, I was overreacting. Let me jump back in this thing and let's run it up. That's what Sam is saying. At least that's what my little paraphrase and my little, what I'm reading. Filter system's a little different, right? Filter system's a little different. Bitcoin dropped below 90,000 on Tuesday before recovering. Many tech investors have large cryptocurrency holdings. So the pullback raised worries that a bigger stock market drop may follow. Bitcoin was last trading just above 91,000 a coin. Outside of tech, Home Depot shares slipped after the home improvement company reported an earnings miss and cutting its full year outlook. And I discussed that this morning a little bit more in depth in the morning video, but I'll give you a little recap, little cliff notes. Home Depot is a retail giant. Right? They sell all kind of home improvement stuff. They sell all kind of cleaning stuff. They sell lumber. They sell all kind of, just everything. Not just for consumers, but for, businesses, for contractors. But all of that stuff, man, is 90% of it is getting hit by tariffs. Right? The consumer is starting to contract and pull back. Therefore, what happens to your contractors? They pull back. They see, because contractors can't come into Home Depot and buy lumber and buy cement and buy whatever they buy. They can't buy that stuff unless they got consumers willing to spend money on their services. And right now, America is pulling back. Why? Because the bottom 90% of Americans are in a bust economy. You got food bank lines wrapped around the corner of people trying to get food. They can't afford food. So they're not going to want a home improvement project. If I can't feed my family, if I can't pay my car note, if I can't pay I can't do home improvement. So guess what? Contractors suffer too. Therefore, Home Depot suffers. That's the reason they're cutting their guidance, their full year guidance around revenue. They're cutting it. That's why they missed revenue. They missed it. Earnings miss. I don't know, guys. All I'm going to do is keep dollar cost averaging in long term, 9 more years. Hey, man, everything want to be on sale. Great. Because I got 9 more years. I'm going to keep earning. Multiple streams of income, doubling down on the earning. I was watching another YouTuber today and he said something real good that I really liked. He said, right now, man, is a time not to worry, but just to double down on the income. Just keep doubling down on your income sources. Keep working the income sources. And I agree with him 100%. I ain't got time to be worried about NVIDIA earnings report or Microsoft. I ain't got time to worry about them. I ain't got time to worry about Home Depot. What I'm trying to worry about is my Home Depot right here. So I'm going to double down. I'm going to double down on what? Earning. I'm going to continue to earn. as much as I can earn. I'm gonna start eliminating unnecessary expenses. Cars gotta go, house gotta go, everything's going. I'm getting rid of it all, guys. By January, this house will be up for sale. By January, both of the Ferraris will be gone. The G-Wagon might be gone too. I'm selling it all. And I'm getting lean and mean because I don't know where this thing gonna go. So I gotta have a bunch of cash in the bank and continue buying these investments through dollar cost averaging. At some point in the future, they go back up. I don't know when though. But until then, I gotta consolidate and get lean and mean. I don't want no debt. No house debt, no cars, nothing. I'm gonna get lean and mean. So by January 2026, all of this stuff will be gone. I'm gonna be back to just grinding. Y'all drop me some comments and tell me what y'all gonna do. I don't know, man. I'm just trying to do the best I can to take advantage of this once in a lifetime opportunity to build some wealth. And I don't want things to get in the way of that. I don't want things to get in the way of my wealth, man, my freedom. See, my freedom is more important than things. Like I said, drop me some comments and let me know what your game plan is. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy, get wealthy, and I'll catch you on the next video. Peace. Moomoo is going to give you some NVIDIA stock when you open up a new Moomoo brokerage account and make a deposit. All you got to do is get down to the first link in the description box. That's the Moomoo brokerage link. Click on it and get all the details on how you can get some NVIDIA stock. Don't delay, act today. Second link down in the description box is the Wealth Builders Financial Community on Patreon. Guys, all we do in that community is help each other build wealth, get to financial freedom and passive income. If you want to be a part of our team, all you got to do is click on that second link. It'll take you over to Patreon and then come sign up for the fastest growing financial community on Patreon. We'll call the Wealth Builders.